Welcome back to the podcast. Don't forget to go to the website at retireyoungaudio.com and leave us a comment. Also, subscribe to the Retire Young podcast at Apple Podcasts, iHeartRadio, and Spotify.
If you're just tuning in, Al was shedding some light on what is going on with these markets because they have three directions. We've seen a big down day on Friday, and that's all that spells is opportunity. The average person doesn't understand that. I know when I ended that last segment, Al, I wanted to get into these other asset classes, the futures, Forex, and options market, but we've been talking a little bit about a down market. I want to clarify what that really means. It means shorting. So institutions, when they're looking to profit in down markets, they short the market. They sell first, and then they buy it back to close their position out to realize their gain.
Ooh, it sounds like just the opposite of what most people do.
Exactly. Explain that in layman's terms what that really is, so our listeners can understand that.
Yeah, it really is a game changer for a lot of people. If anybody is in the market and does not have an opportunity to participate when it's going down, there are strategies that you need to learn. Shorting is one of them. Institutions use this all the time. Professional traders use it. It basically is, as Josh said, it's selling something basically that you don't own. It's borrowing shares of a stock or maybe an ETF that mimics one of the main markets, the primary markets like the Dow, Nasdaq, or the S&P. It's borrowing those from a broker, selling them at the price at that particular time, with the intention of buying back to return what you've borrowed at a lower price. It sounds like it shouldn't be legal to take something you don't own and sell it, but that is the way the system is set up, and that's what the institutions take advantage of.
They do, and to clarify that, it's available to the public as well.
It is. It's just that not many Wall Street advisors are talking to their clients about that, and probably, I don't know that a lot of the advisors are doing that. The institutions and their companies are doing it. It is only one way of participating in a down market. And by the way, if you are at all thinking about shorting, if it's something that you would like to learn more about, we talk about it in these classes that Josh is talking about, these free classes. But the key there is to have protection, because as with anything, there's two ways a trade can go for you, basically two ways. You can either win or lose. In both cases, you want to be protected. If you lose, if you're wrong, you want to be out of that trade or out of that position before damage is done. If you're right, you want to be out of that position when you hit your profit target, or stay in it until you have the profit that you're looking for. But shorting is one way of doing it. You can do it with individual stocks, and you can do it with the markets in general. And another way of doing it is with options. Options can be used to make to have profits in a down market. It's a put option. If you buy a put, you are buying an option that will go up in value as the underlying goes down in value.
You're exactly right, and I want to get into more of those options, the puts and calls, and some of that terminology. But think about this: institutions are very wealthy. They're always generating income and building returns, and that's just they're smart. They know how to do that.
Correct.
And it's just education, and they've had the financial literacy. Now think about this as well. If the public understood that, what could be different for the public? I mean, because we're seeing a retirement crisis right now. People aren't getting the returns that they need, so it's just becoming more financially literate and just understanding what is available out there. The institutions are doing it. It's not just available to them. So, Al, what I really like about these investing classes that I have some tickets that I want to give away to is we get a lot of investors that are invested in the market, but maybe not be active with it. But they're technically brand new to these financial markets, and these investing classes are just for them. Because if they've never traded or invested on their own in the past, that's okay. This is for the new person. So I want to give away some tickets to this investing class for callers 1 through 10 to understand how the institutions and see why they're shorting the market, why they're buying the market at certain areas, and it's just how the financial markets work. Now, Al, a lot of people are just buying stock, and that's all they do.
Right.
Now, the institutions, they're not only buying stock; they're buying futures contracts. They're buying and selling Forex positions. They're doing options contracts. Let's explain what those other ones are. Let's go with let's start with the Forex market. What is that, and why is the institutions utilizing that? And why are they using less capital as well?
Oh, good point. Well, the Forex market, it's really the foreign exchange market. That's Forex. And it's basically where you are looking at the exchange rate between two different currencies. So you're using one country's currencies basically against another. It's traded as a pair. And the reason institutions use it is that it has huge liquidity. It is the biggest market that is out there. It trades $5 trillion a day.
You mean it's not bigger than all the stock markets?
The stock market is the smallest market. Then you've got the bond market. You have the futures market, which is bigger than the stock market, and then the Forex market, which is bigger than the futures market. It is a huge liquid market, which makes it easy to get into and out of positions.
Is that what you mean by liquid?
That's why by liquid, right? Huge
Okay.
volume, and it trades 24 hours a day. You want to exactly.
You want that as an investor, don't you?
Exactly, and I think one of the mistakes a lot of people make when they first enter into trading is not understanding that the ability to get into something and out of something at the right price, and not have too much of a spread there between what you pay for something and what you can sell something for. It's part of the education that we teach. And, and again, the classes that you're talking about, Josh, the goal there is for people to come in and just see if this is something that is right for them. And it may not be for everybody. Some people are maybe listening to the show just to get some information. But if you want to find out whether trading and investing is something that you have an interest in and may be right for you for your goals, then this class is great. We talk about the Forex market. We talk about, you mentioned why do institutions put less money into that? Well, Forex has leverage. Forex futures options, those are leveraged assets, which means that every dollar that you put into one of these trades has a multiple of that dollar. And again, that's one of those things that seems crazy. A broker will, let me say, have $1,000 account and control maybe $100,000 or $50,000 worth of an investment. It sounds crazy, but that is the way the market goes. That's leverage, and that's one of the reasons institutions use it. They maximize their buying power. They can have less money in a position, maybe have more positions.
And think about this, Al. A lot of people are afraid to get in the markets because they think they don't have enough money. Brokers require less capital for those, right?
Correct.
The stock market, there's actually a pretty big buy-in for that. If you want to trade more than 4 times per week, the brokers require, was it 25 grand or so?
25,000 is a minimum. They categorize you as a pattern day trader.
Correct. But with those other assets, brokers require less, don't they?
They require less, and if your goal is to day trade, and the education we provide covers everything. If you want to be a day trader, we'll talk about that. If you want to be a long-term investor, we talk about that. We have education that covers all of those. But if you want to be a day trader and you don't have that $25,000 minimum, then futures can be used as a day trade. You can day trade futures when there's no $25,000 minimum.
And I just want to clarify that term, day trader. A lot of people, we talk to a lot of investors and they say, I don't want to be a day trader. It's just a term. That's all it is. Right. It's just, all it really means is an investor is in and out of their position in the same day. So it's just a term, and a lot of people shy away from that because they think it's a bad thing. And the movies show that.
No, they do. And people have a perception, which is probably wrong, about a trader or investor. And they have a perception about what you need to know and need to have, which is probably wrong. But I think a proper education, and there are all sorts of education sources out there, but I think to really benefit, an education source should provide education on all of those different strategies, whether you want to be a short-term trader or long-term. And by the way, there's a difference between long-term and short-term trading and investing. And you really should have a balance between your short-term savings and your long-term saving. It's a combination of both. And a good education will cover all of that. And it will cover the strategies that can be utilized in all three market directions. Some people just have an interest in the foreign exchange market. Some people have more of an interest in futures. If a person's goal is to have short-term income, daily, weekly income, futures is probably the best market,
and that's why the institutions use them.
That's why the institutions use them. Exactly.
I like when you explain why these institutions are utilizing these other ones, because it is available to the public.
Of course it is, but here's a problem that the institutions or advisors would have if their clients were all using futures contracts, for example. If futures trades, sometimes you get into and out of on a daily basis or over a couple of days, and an advisor has several hundred clients. There's no possible way they have enough time to devote to doing all of those trades for their clients.
You're right. These segments go by so fast, and I know we kind of got through the Forex market. And the next one, I want you to, we reference futures, explain what those are and everything. But Al, you've talked a lot about education, and it all comes down to being more financially literate or just aware of what's available. The institutions, they run the market. They are trading futures. They are trading Forex. They are trading options in income accounts and retirement accounts. They're doing it all. And it's just because they've learned, and that's all it is. It's available to everybody. That's the nice thing about the financial markets is these assets are available. And brokers, it's just a brokerage account that people have to set up.
Thanks for listening. Don't forget to check out the website at retireyoungaudio.com and leave us a comment.